Selling shares of an LLC isn't as straightforward as selling corporate stock. Unlike corporations, LLCs don't have traditional shares. Instead, they have ownership interests. This distinction is crucial for anyone looking to buy or sell a stake in an LLC. An LLC, or limited liability company, is a privately held business structure that combines elements of corporations and partnerships. Unlike publicly traded companies, LLCs don't issue stocks that can be bought and sold on stock exchanges. Instead, ownership is divided among members who hold percentage interest in the company. The key difference between an LLC and a corporation lies in their structure and management. Corporations have shareholders, a board of directors, and strict reporting requirements. LLCs, on the other hand, have members who make decisions collectively, with fewer formal requirements. This flexibility is one of the main attractions of the LLC structure. Understanding LLC ownership interests is crucial when considering a sale. Each member owns a percentage of the business, which reflects their contribution and rights. This percentage determines profit distribution, voting power, and financial liability. Ownership can be structured in various ways, such as equal ownership, capital-based ownership, or performance-based ownership. If you're looking to sell your ownership interest in an LLC, there are several steps to follow. First, review the operating agreement. This document often includes buy-sell provisions and may require unanimous member consent for any ownership transfer. Next, determine the value of your ownership interest. This can be done through market-based, asset-based, or income-based valuation methods. Once you've established the value, notify other members of your intention to sell. Many LLCs give existing members the first right of refusal before allowing a sale to an external party, say. After this, draft a buy-sell agreement that outlines the details of the sale, including the buyer, percentage of interest sold, sale price, and any transferred liabilities. Finally, obtain necessary approvals and update legal documents. This includes filing an amendment with the state to reflect ownership changes and updating tax documents with the IRS if the ownership structure changes significantly. It's important to consider the tax implications of selling LLC ownership. The tax treatment depends on how the LLC is classified for tax purposes. For single-member LLCs treated as sole proprietorships, the sale is reported as capital gains on the member's tax return. For multi-member LLCs treated as partnerships, the buyer assumes a proportionate share of liabilities, and tax forms must be updated to reflect the ownership transfer. LLCs taxed as corporations may trigger different tax obligations. To summarize, selling shares of an LLC involves understanding the nature of LLC ownership, following the steps outlined in the operating agreement, properly valuing the business, and considering the tax implications. Unlike selling corporate stock, the process is more complex and requires careful consideration of legal and financial factors. If you're considering selling your LLC ownership interest, it's advisable to consult with legal and tax professionals to ensure a smooth and compliant transaction.